Hey, it's the Market Sniper. How are you guys? Yeah, glad to be back with you. Update with the charts, shall we? So, what a week we've had. Wow, what a week we've had. Yep. So, some of you will have noticed what copper's been getting up to. You also would have noticed what silver's been getting up to. Of course, gold made a new high. Lots of things that we've been talking about. So, here's what's been going on. Globally, reset, money is contracting. The debt and the fiat is contracting. It doesn't matter where you are. Some are contracting less than others, but the full subset of all the dollars, the yens, and everything together, tied with their associated debt on their little seesaw, are contracting. You can have a fairly firm dollar. You've got greater devaluing USTs because the interest rates were pushed. That drove the dollar up, actually driving the debt market down. Summing those that are big dollar bulls like to forget. And on the other side of the equation, you can have the Japanese maintaining the value of their debt up top here and their yen getting pushed down. But overall, both over time is going to contract, the debt and the currency. The pressure is being let out of the balloon, and you either take it on the currency or you take it on the debt, but it's going to continue to be let out. You've got 40 years of hypervaluation and proliferation to devalue, and it's going to be undone far faster than it was put on. That's right. So the bull market turn of 2020 that we were the first to call is very much on its way. And what does that mean? It means the buying power of the money, as the debt devalues, the money is devaluing. The destroyed, contracting buying power of your money is buying you less things. And the substitute commodity bull market that comes out of it, the best category, is the replacement financial system, which is the original financial system of sound money, silver and gold, that does not allow for an over-proliferating class to maintain a largesse at the expense of the rest of the citizenry, as they keep you trapped on inflationary, devaluing fiat system. So that is why gold and silver has led the chase. However, you've had soft commodities we've spoken about. We've got the reinflation back up of Robusta and Arabica coffee, which we'll pass by today. All of this, we're going to tell you a little bit more about what's going on in the world. But first things first, a major triggering event occurred during Friday that held below the level, one of our core triggers that we provided you, and that was the event of the gold-silver ratio. So let's take a look at the charts. Here we go. The gold-silver ratio. Now, you know from our side is that we have been above this bagel level for an extended period. Yes, they were wicks, so we're on a weekly time frame, but the last time actually you were trading below on a weekly level is a very, very long time ago. Let's go and have a little look for you at that exact fact. When was the last time a weekly candle was below? And you're talking about 2014. That's right, the Maidan crisis of Ukraine, when Victoria Nuland bragged to the Polish foreign minister, later on a tape to be released by the KGB, how she flipped the Ukrainian government for no more than $5 billion, buying rent-a-crowd people to protest in the freezing cold, only to be shot on by CIA forces as well as the police, to give the impression that the citizens were firing on the police and the police were firing on the citizens. That led to a big outbreak and skirmish, eventually leading to the political leader having to run for his life. That's right, 14 was the year that occurred. And as we look at this 65 level, that was the last time in 2014. And that's really interesting. It's really interesting, says the man who just about can do his mathematics. August 2014, and where are we now? We are 2024, some 10 years later, and we are yet to fall below the 65 level, but we are at the 75 level. So let's just have a look at that basing ascending grind line. Since 21, you weren't below it. You've wicked below it, but you've never been able to close below it. You've been perpetually in an upside grinding channel. Why has that been? Well, the central bankers are the first to move. They move the most, the hardest, and the longest. They buy the heaviest and the highest value precious metal to store the most value in the denser space, meaning they pay less in storage, and that has been gold. But what we've started to see is one of the next shoes to drop, and that sure dropped on the last week. This is, again, I remind you, a weekly chart. We closed Friday down right here, and where was one of our key levels of significance from previous notes, and it's been on this chart for an extended period. Go look at all our videos. 75, that was an interaction with 75. You've not been sub 75 since back here. That was the last time that you were sub 75. That was around about October 2021. So that's over 3 years. You are now threatening to break below the 75 level. So there is a lot of things occurring right now. The gold-silver ratio has triggered. And we warned it would be a proper impulsive candle with real momentum to the downside. And that's exactly what you got. It went boom from around the 83s, 84s, 85s to smash suddenly down at the 75 level in a wick. It has rallied slightly off there for now and is sitting on a staging post just above the 75. Will you get a return move heading back up, or will you get a wind up and further downside? We can't tell you which one of those will occur just yet. It's still a bit too early, but in the longer term, we see the move down to 65, which will be the first time that you'll go sub 65 on a weekly candle since that 2014 date that we were telling you all the history that went down on that there day. That's right. So this is a major one, and of course silver has been a shining star as a result of that. So if we go and put you in, we go through the gold and the silver charts just to remind you, don't forget pure gold in the link below. You can secure your gold and precious metal needs from them right there by utilizing that link. I utilize them to purchase both gold, silver, and have even purchased platinum from them as well. Okay, let's have a look at the gold. And I want to just recap some of the big numbers we've thrown out for gold. Yes, you're getting a little bit of a rejection. The Fed is going to talk, the sort of FOMC meetings are going to talk. You're going to probably have a bit of a sell-off. You might get a bit of a revival in the dollar right now, etc., etc. But the economy, as we said, you get series in trends on charts. You tend to get trends, and in data you get data series that trend and then pivot. And we warned at the last potential live trading day that we conduct, which was non-farm payrolls of Friday, we suspected that the dollar strong narrative might come under stress, and that you would be in a situation where gold, silver, and potentially Bitcoin and crypto could start getting to move again on the basis of weakness. And you had a miss on the non-farm payrolls number, you had an overshoot on unemployment, which is obviously negative, and you had an undershoot on earnings. All three misses. Then in CPI, a couple of weeks later, which was just last week, you had disappointing CPI numbers coming in really low on the CPI and the month-to-month, meaning retail consumer not so strong as being purported. So suddenly you're starting to get a series of data that are pointing to the fact that the economy is not so rosy anymore, and now the cuts narrative are coming back in. And of course, that's the template you've been given. Gold only goes up on interest rate cuts. That's the template. It's not obviously the truth. This is a original financial system that will always run better than an overhyped, overborrowed fiat and debt system that is in its dying death knell turns. It is a Led Zeppelin waiting to crash into that mountain. Anyway, so let's look at some of those targets. Let's have a look at some of those targets that we've put out on gold. Some are asking, Where did you say? So the first continuation pattern, that was this one over here, that started after the last high. That was in July 2020. That set up this full continuation pattern. We said 3 times you will break, and then the 4th time you will break and hold above. That turned 2000 into support. You got a nice little squeezy Japanesey that gave you a kickstart of a run, and you've been smiling ever since with your long gold trades. Where does that target end? It ends at 2897. So we see 2,900 being taken to the threshold of the 3,000 mark. The Federal Reserve and all the banking cartel adherents will not be excited to see the 2,900 mark be met, the 3 grand mark at least. So 2,900 may well be a holding station for a while. Then let's look at the monthly bigger charts to have a look at the huge moves that have been afoot for precious metals since way back when. Now if we're projecting from the lows here as a continuation pattern since these lows down there, now that was some time ago. Remember the $34? Yes, you probably wouldn't way back when, but you actually got gold and silver that cheap. And then the run up to the 80s high. Were you to get a similarly measured move from the lows that were the 2000s into 2001, that was peak financialization of absolutely everything in the world. That run up would take you to the 6,387-ish. And when we take this projection here on this flag from just the last major up leg of the bull market, from the 2000s low to the 1927 of 2011, then the pullback, if we have that projection forward up, you are at 7,800. So we have a cluster of targets waiting for you, just sub 3, then at 6.5, and then around the 8,000 mark, 7.8 going for 8,000. So you'll have a pause at the 8,000. These are big projections. They don't happen overnight. You obviously have the 3.5 to make. Many people didn't think we would be sitting here looking at this at 2,392. That's right, $2,400 almost. Let's have a look at the dollar gold chart on the smaller time frame. That's after a bit of a sell-off, by the way, with the expectation of the federal minutes potentially likely to bring in a little bit of calming. So you can see gold there, marginally higher high. We don't tend to overly like that. I think you're going to probably squeeze higher on a rising wedge type structure. These are quite difficult to potentially trade. You might want to get in along the lows over here if you start to see support coming in along here and working your way up. Then out of that structure, if you were to get that rising wedge, I would expect something very impulsive to the upside for gold. But let's go to our friend silver, who has livened up a great deal since then, and talk about the silver market as well. So XAG USD. So the gold silver ratio triggering is actually a very bullish thing for all of precious metals, not just obviously silver. It is very bullish for all of the precious metals. I want to tie this interesting chart in a draw for you. Let's make sure we're in the log scale here. That's right, we are. So this is silver from a similarly long way back. I think we were at 1969 when we had the gold at $34. I think you're around $1.20 here in 71. $1.20. Wow, what a long time ago 71 feels. That was peak Vietnam. That's right, peak Vietnam. Fighting the communists on the other side of the world. Remember that? Yes, I don't know if you do. We are the communists now. That's the good news. So with that huge up leg, that was the bull market that took you to the gateway of $50 from around $1.20. By the way, that's a pretty nice number in terms of increase. It didn't happen overnight. It was 71 to around 81. But in a decade, you essentially made for yourself the better part of about 40 plus if you're at $1.20, because you're on the gate level of the $50,000 mark. This particular target generated would be 130. Now, we've also done other upside HVF structures, but this particular one will take you to 302. This is an upside HVF, and you will be in a very, very powerful position if that turns out to be the upside break we think it is at the moment. So that's your secondary high over there. That's your secondary dip low. That was the $11 mark. It took the events of March 2020 to generate that, by the way. And that is your third high. And that third high has just been triggered. So let's just be clear of what I'm saying here, good friends, men and ladies of the ministry. Let me tidy this chart up a tiny bit because it's looking a bit ragged, and put a 2-monther on it and just stretch it out a little more. This is a very, very exciting day. Or week, I should maybe say. Let's take these lines off. Sorry, I'm accidentally drawing some lines there. Let's put that on there and take the lines out of sight. There's too much going on. And put in our HVF draw tool. Don't forget, as I say, Pure Gold video link below. You can be securing your precious metals from them and they will deliver to your door. Let's just draw that particular structure setup to give you an idea of what we're actually talking about. Hold on a little bit. Let's go there. So for me, in this particular draw that we've put together, I think we've just had this week, literally, or I should highlight that this is a bi-monthly chart, so apologies for saying the word week. This particular cluster of 2 months, it's literally happened in the last week, of course. We have triggered and run the Wall Street Bets high. That was the high of late 2021. And that is the beginning of a move that we could see running $302. $302. Is that tomorrow or next week? Certainly not, it isn't. But it could get very disorderly in your favor. In other words, silver could climb very disorderly in a very strong manner in your favor for a sustained period. Other people that aren't comfortable with HVF methodology will be drawing cups and handles. They'll draw that as a handle, and this as the better part of a 1970s, 80s, 90s, noughties, all the way into 2011 cup, and bring you across here and say, there you go, that's your cup and handle, and they'll put a straight line across that. I'm quite comfortable with our HVF methodology and what we're generating as a target out of that, and $302 would be absolutely epic, of course. But I do warn, when you hear these big numbers, it's not going to be the same dollar. That dollar isn't buying you the same amount of bread or fuel that it used to. This is a devaluing fiat system, a devaluing debt and fiat system right here. So we've given you a couple of big numbers on gold. You've seen 7,800, 6,500, 2,900, and we're now throwing out a key breaking event at $31. Happened right now, right here, right now, after the post March 2020 surge and the subsequent pullback that saw that angled line run there. You have now run the 31 high of the Wall Street Bets, which is the beginning of that triggering event of whether you want to call it a cup and handle or macro upside HVF. That's up to you. Our targeting using HVF methodology suggests a run of the $300 mark. So that's some pretty sexy numbers that we're reminding you. Now, again, those things will not happen overnight. Let's just talk to you about a couple of other things that have been going on. So while we're in the precious metal space, something that doesn't get spoken a lot about nearly as much is platinum. And I'm going to remind you about platinum. Platinum is unbelievably rare. It is 30 times more rare. There's 30 times less of it than there is all the gold mined in all the platinum mined. It is super, super rare. And the nation states that bring it are Russia and South Africa, and they're not always in the best condition. South Africa in terms of the mines and the power, etc. So this has been one huge macro falling wedge. During that period, platinum was $2,300 up top there, by the way, and gold was substantially less during that period. Now you find yourself in the situation that platinum has only just crept back above $1,000. That's right, it's only recently just crept back above $1,000. This falling wedge had a breakout, you popped up, you then had a return move, and what has happened is you've set up for us a large macro upside HVF. Again, we're on a monthly time frame looking at platinum for you, and we're now going to take a closer look at its more recent history in this particular setup. So let's get the setup drawn again for you. So here we are in this latest detail. This is subsequent to breaking out of the falling wedge. So we had a multi-decade falling wedge. It took you right back to, you know, the Great Depression of the GFC. Subsequently, you've got this winding up structure, and it has triggered, and this is pointing to in and around almost $1,600. You can see the target that we've generated there for the upside. This is a triggering event. You're getting a small pullback right now that may allow for cheaper entries, but I would expect platinum to start making some good running as well in the precious metals complex, and 1584 to be one of those legs on the upside, first of many, because this is the first structure in a new trend, and we expect open performance on that. So I would not close more than 50% of that position. Despite that, you're still getting a 14 RRR, 14 risk reward on the original draw as we gave to the community. That has unfortunately changed now. If you are getting in on a pullback there, I would optimize my stop to around just under the last low, and you would be getting up to there. So it's around 4.5 for you. Don't forget, book a call and get the big R's with us via the link below. And as a result of that, as I say, be part of the community getting the early trades. So that's platinum, and I expect that upside performance to carry on beyond the 1584. And I think platinum is going to be one of those special ones that will super perform. Sometimes, depending on what day you wake me up, I'm not sure if platinum could even touch or on occasion beat the expectations of that I have even for silver. Okay, let's get on with the other markets. So high-grade copper is one we'd given you. Some of you have waded into the ETF. I'm delighted for you if you did, and you're doing well. This is how it is looking. Look at that copper chart, how it's been moving along since the big breakout that it made a better part of March 2024. Really good and happy with that one, and potential, I would say, for even more to come. Let's just pop that over there. I think it's going to have its first meaningful pullback right now. Why? Well, because it is in a little bit of a pullback range. I think we're getting some essence of the dollar weakness. They want to rein it back a little bit. We have made on the bigger structure that I'm drawing here, your second interim, and that's why you'd probably have a pullback, but we're still calling for the better part of 6.136. If you're in the likes of COPEX, you will be experiencing a similar level of performance in terms of the upside. You will have run from 3.9, that's around 4. From 4, sub 4 to 6 is the better part of 50% as a move. Remember, part of our ETFs, 50% plus baggers, and these are moving in quite quick succession, you know, especially now that everyone heard Druckenmiller has said copper is the fail-safe trade. Well, you heard it first from us. Only those that took action would believe it. Now everybody will believe it to be true, now that it turns out Druckenmiller reveals his trades. And hey, it's the trades the sniper gave you before you revealed these trades, some months before. Oh well, there you go. People will listen to Druckenmiller. They won't listen to little old Mike or Sniper. Anyway, so off we go. pullback on the way at the moment after running that second interim, but more upside for copper. So there's that. I also wanted to highlight the reflation after a sizable pullback on Robusta coffee. And the same is very similar also, by the way, on the Arabica coffee. But when you look at where these have come from and how they've been doing, you are in a bull market, friends. You are in a bull market for coffee. Let's go right the way down. You could have been, when was it? November 22, when we started saying the big commodity moves are going to come across the board. And we've spoken before of coffee and the softs. You were at 1786. You're now at 3880, and you've traded as high as 4.5. Yes, you've had a little bit of a sell-off here, but look at the buoyancy you're coming back at. The softs are going to be moving as well. The metals are moving. You've got platinum, which is kind of an industrial precious metal that relies on industrial demand a lot. That one is moving. What isn't moving? Well, we'll give you one equity that probably might break to the downside. You're not moving. United Parcel Services may actually sell off in this environment. Why? Because not enough people are buying parcels from Amazon.com. Why? Because the consumer is being hit with devaluing money. Their money in their banks are devaluing. They're paying you back in monkey money. They are treating you like monkeys and paying you back in devalued monkey money. This is what you need to understand. And if you want to build your wealth, not get monkey money paid by monkeys who are conning you, then you need to contemplate clicking that first link below, booking a call, and joining our community potentially on how to build wealth in an stagflationary environment where the money value is going down, yet the growth is hard to come by for the everyday man. That is stagflation, everybody. That is stagflation, and that's where it is. And I think the consumer is hard hit for now. What you need to do, you need to have your precious metals, your real estate unencumbered, land unencumbered, other physical assets that you yourself can hold. Keep them out of the tokenization of everything, and then you're going to be a whole bunch better off. Look after your security, look after your self-reliance in terms of food, water, and other aspects, and you're going to be just fine in this great Bolshevik experience. Also, the thing you never want to hear from me that I'm going to keep telling you, it's time to leave the West. It's time to leave the West. The great devastation and leveling is coming for the West. Be out of there. Yes, it's hard to do. Yes, I know it's hard to do. I know you have kids and a dog. Take them all with you. That's how it works. But it's time to leave. Okay, till next time. I hope you've enjoyed this. Pure Gold link below. Don't forget for clicking and securing your gold and bullion vault. And if you want to save yourself from the ravages of a hyper-stagflationary environment designed to strip you of your wealth, if you can want to build wealth in that environment and preserve what you're making, then we are your guides. First link in the details below. Until next time, catch you later. Bye for now.